So where do we go from here? Will the euro hold steady, or will we see it fall even lower? We bring in right now Brian Dolan, Chief Currency Strategist with Forex.com, live from London. Ashraf Laidi is CEO with Intermarket Strategy. Good to see you both. Thank you so much for joining us.
Afternoon, Maria.
Brian, you say we could see a rebound in the euro, right? Back to 131, 132?
Yes, I think so. There's currently an excess of short euro positioning. Everybody's already in on this trade. The rating downgrades were not unexpected at all. France, a little bit of a surprise, but still, it's only S&P right now. So that and the ECB and other measures taken from Europe by European officials suggest that we might see some stabilization in the euro. The key level for me is 126.00. It's a major retracement level. If we close below there, then the downside is open. But otherwise, I think we could see some correction from here.
Ashraf, what do you think? You're holding to your call for the euro dollar 121 by the end of the first quarter.
Yes, we could go all the way towards 123 and then even all the way towards 121. I do not disagree with Brian's view that we could have a technical bounce all the way towards 130. Here is the thing. In order to understand what's going to happen in the next 3 to 4 months, let's understand the difference between what happened this time last year and this time in 2010. This time last year, we had a lot of the downgrades from Ireland, from Portugal, but the euro did not go all the way down below 127. It stopped right there. Why is that? Because the situation with the US was not very, very good, and actually the risk appetite situation was quite positive because of the positive engine from the BRICs. This year, however, the engine from the BRICs is slowing, and even though the US data is pushing to the upside, we think that we're going to get to a point where the US engine is no longer going to be able to go it alone without the BRICs and without the Eurozone, to the extent that the US is going to be needing that QE3 from the US. The speculation of that may stabilize the euro, but we don't think the Fed is going to be able to give the effective type of QE3 that the euro is really wanting and the stock market. So that's why we could still go back and stay around 121, 122.
So, you know, I mean, we've got the QE3 possibility here in the U.S., and then, Brian, you've got these sovereign debt ratings downgrades that we're expecting. Brian, what kind of an impact might you see on the euro once we get these downgrades?
Possibly another knee-jerk reaction to the downside, but after that, interestingly enough, we've held the week's range lows pretty much, briefly broken, but we're back inside of the range. So it suggests that the market has priced this in. And if you take a look at how European bond markets also reacted, initially you saw Italian yields spike, but they have came back down and finished out the day unchanged. So I think it's safe to say this is a priced-in event, and we're very likely to see a bit of a rebound, sell the rumor, buy the fact reaction. And then again, going back to the QE3, I think the speculation is going to heat up going into the Fed meeting, and that also is going to lead to some dollar weakness.
Let me get to Simon Hobbs. The news is actually out right now. We've been waiting for it all day. Not unexpected, but we're actually now getting the official statement, and Simon Hobbs has it.
It is coming out painfully slow, I'm afraid. We still don't have a news release, but we do have Reuters with one snap confirming that France has been downgraded by 1 notch to AA+. Maria, as we get more, we'll come back to you.
Okay, Simon, thank you so much. S&P downgrades France 1 notch as we expected. Of course, the finance minister of France telling us earlier that the credit rating there is now AA+, down from AAA. Is that a big deal to you, Brian, that France loses its AAA rating? Implications here?
It could be. It certainly jeopardizes the credit rating for the EFSF, leaving really only Germany as the major AAA backer of that fund. So we could see a cut in the EFSF's credit rating. That, of course, will then increase their borrowing costs and basically undermine the entire effort to stabilize the debt situation in Europe. But again, it's only S&P. It's only 1 notch. So the credit markets right now seem a little bit more hospitable to the EFSF than otherwise might be the case.
Ashraf, isn't it interesting that, you know, ever since the U.S. got downgraded last year, ever since, money has been soaring into treasuries?
Yes, very well so. And actually, if you look at this morning, Maria, the yields for the Eurozone are actually going down. So if we're really going to try to live our life by what the yields are saying to us, it's really not going to mean much. The money that the European banks got, the €500 billion that they got on a 3-year basis from the ECB, they're taking that money and they're buying it on one of the newest, biggest carry trade. They are basically borrowing that money at 1% from the ECB and buying these auctions, these Italian, these French auction at 4 to 5% yield. When you look at the news, you say, oh, look at that. The yield went down from last time and the bid to cover ratio is good. Everything is fine. Is everything fine? That's not what the S&P is looking at. That's not what Fitch is looking at. So yes, the yields could come down off the highs. The spread could come down, but the growth aspect is not really being done anything about. And that's why we're going to have the technical bounces on all of that that will make a two-way market and will make it more interesting to send the euro back lower towards 125 and towards 121.
All right, we will leave it there. We were just looking at a chart of the euro. It's already falling on this news that France got the AAA rating downgraded from S&P, which even though it wasn't unexpected, we're looking at further declines for the euro versus the dollar. Thanks, gentlemen. We'll see you soon.